What is up, everybody? Happy Thursday, and welcome back to the Everything Crypto Show, where we keep you up to speed on the most important news moving the crypto markets. Now, we are back today with a very important daily market update, as Avalanche has partnered up with two of the largest cloud providers in the world, at the same time that it has broken a major record milestone, actually holding more Bitcoin on the Avalanche blockchain than is currently being held on the Bitcoin Lightning Network. Then I do want to talk about a paper that I found here from AWS Amazon, talking about the implications of a retail central bank digital currency, and I want to talk about why I believe that Quant is going to play a big role in collaborating with Amazon on an upcoming digital euro. And last but not least, I do want to address some concerns with the Cronos chain, namely the pretty much record low amount of transactions that have persisted since late last year. I want to talk about what this means for the future of the Cronos chain as well as CRO Coin, and we're going to break all that down near the end of this video. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Now make sure to hit that sub, like, and notification bell if you have not already, and join the Everything Crypto Squad. And with that, we're going to hop right in here with the question of the day. I want to know today, do you think that ETH will remain the king of DeFi for the next 5 years? Let me know in the YouTube comments down below. And keep in mind here that if I go over to DeFi Llama, at the moment, Ether makes up 65.25% of all total value locked across blockchains with 47.73 billion in TVL, while we have the Binance Smart Chain in second place here with an 8.72% DeFi market share with 6.38 billion in TVL. This means that right off the bat, even for second place to catch up to Ethereum, you would have to see about over $40 billion injected into the Binance Smart Chain. And that's why I personally do think Ethereum will remain the king of DeFi for the next 5 years. But as always, interested to hear what you guys have to say in the comments. And with that, we're going to hop right in here with the Bitcoin and Ethereum chart, as obviously they do dictate where the rest of the crypto market moves. And at the moment, Bitcoin is continuing its move to the downside after multiple rejections at 25,000, currently down to 23.7K. And if I actually bring us onto a year-to-date chart here, you're going to notice that Bitcoin got rejected once, twice, 3 times, 4 times here at the 25K mark, and was kind of hugging this line for the past week, and we have begun to broke down from that level after multiple rejections. And I did say here on the channel that I would expect a breakdown at 25K to bring us back down to $20,000. And the reason being here is that 20,000 is in fact the 2018 all-time high. This is a very important level of support, as well as a very important level for overall market sentiment. This was the first bear market where Bitcoin actually broke below a previous bull run all-time high. And therefore, when we are below that level, I think that it is pretty negative for market sentiment. But if we could retest 20K and have the bulls hold the line, I think that would be very positive for a more sustained uptrend into the latter half of this year. Now, another first that was made in this bear market was Bitcoin actually breaking below the 200-week MA. And what do you know, the 200-week MA is currently sitting at $25,000 on the dot. That is why I did say last week to expect some resistance at this level. You can see here that we had 2 weekly candles actually attempt to wick above it, both of which were unsuccessful, as they did in fact close below it. And therefore, I did say we should expect a retest of 20K, and I do think that would be overall very healthy for the crypto markets. And you guys can see here, right, that based on prior history, generally speaking, the 200-week MA has been a very strong level of support for Bitcoin, probably one of the strongest levels of support on the entire chart. And it has led to some very big runs in Bitcoin's history. This is the first time where the 200-week MA has flipped from support into resistance, and therefore I do expect Bitcoin to have a pretty hard time getting back above this level. But the good news here is that, we could potentially see a retest of 20K, a run up back to 25,000, and then a break above it, which I think could lead to a very explosive move for Bitcoin later on. And now is simply not the time for Bitcoin to get above that level. Now, as for Ethereum, there's a lot of similarities between Bitcoin and Ethereum in terms of the price action. The one difference here that we have discussed is the fact that Bitcoin is actually below its 200-week and 50-week moving average, while Ether is above its 200-week moving average but below the 50-week. Both Bitcoin and Ethereum are struggling to get above the 50-week MA at the moment. And interestingly enough, Ether's 200-week moving average is sitting at 1416, with Ethereum's 2018 all-time high sitting at 1400. So once again, another technical indicator suggesting that Ether, just like Bitcoin, it does want to come in for a retest of the 2018 all-time high, and that is what I will be looking for in the coming weeks. Bitcoin to 20K, Ether down to 1400, and once we have seen those price targets, I should say if we see those price targets, although they do seem very likely to me, then we will update you guys on what I am looking for next year in terms of where I'm looking for the crypto market to move. So with that out of the way, we're actually not going to spend any time today on sort of like the analysis for Bitcoin and Ethereum, because there is so much news to get through when it does come to the three altcoins we mentioned at the beginning of the video. And I do want to start this off talking about Avalanche. So Avalanche, it was announced back in January that they did partner with AWS to scale blockchain solutions for enterprises and governments. And the reason this is a big deal here is the fact that AWS is going to support Avalanche's infrastructure and decentralized application ecosystem alongside one-click node deployments through their marketplace. The affiliation will also include Avalanche joining AWS Activate, a program that helps startups and early-stage entrepreneurs get started on its platform. So John Wu, the president of Avalanche, says that they have over 500 applications on the chain and are looking to give them a better experience, and now they have a real partnership that they can direct to the Activate program. On top of that, their users are always looking for a better and more user-friendly experience, and one-click nodes is an incredible way to do it. So really encouraging the mainstream adoption of Avalanche through one-click node deployment through partnering up with AWS. And it is important to note that a number of blockchains already use AWS to power their networks. About 25% of all Ethereum workloads in the world run on Amazon Web Services. And this is a very big deal because this is not just a blockchain tapping into AWS. This is AWS making a mutual partnership with Avalanche, showing you that they do see a lot of potential in this blockchain. And the big thing I do think that they see the potential in here is the subnet feature of Avalanche. Subnets are a part of Avalanche's scaling solution that can divert traffic away from the main blockchain and allow projects to stake their native token AVAX while creating their very own layer 1 or layer 2 blockchains. So if you guys do want to learn more about subnets, I definitely suggest you check out our top 5 coins for 2023 on the channel. Spoiler alert, Avalanche did in fact make the list. This video dropped, I believe it was last week at some point, so if you click on the channel and then scroll down a bit, you will find it, and we do a much more like in-depth explanation of subnets there. But all you have to know in regards to this video is that subnets are able to branch off of each other, and they are all independent of each other, meaning they do not rely on each other for transaction fees or gas fees, clearing congestion on the network and allowing for infinite scalability of the Avalanche blockchain. This is a very big selling point for AVAX in my opinion, and clearly Amazon does see the potential in Avalanche's solution to infinite scalability. So last quarter, Avalanche started deploying 5 to 6 live subnets, but in the testnet phase, there are over 100 subnets that will be deployed in the next year at least, based on this quote. And he says here that when you multiply Activate times Avalanche times subnet, you have something that is a huge moment. Blockchain technology will become a commonplace and used in our marketplace by developers. So this is a very big deal for the Avalanche blockchain here to actually have Amazon recognizing them as an official partner here of Amazon Web Services. And it does not stop there. That is the largest cloud provider in the US, and now we have Alibaba Cloud, to my knowledge the largest cloud provider in Asia, who is seeing the development of tools enabling users to launch validator nodes on Avalanche's public blockchain. So Alibaba Cloud, which is a subset of the e-commerce giant Alibaba, announced an integration with Avalanche blockchain to power the company's node as a service initiatives. The integration will allow Avalanche developers to use Alibaba Cloud's plug and play infrastructure as a service to launch new validators. Developers expecting high resources demands during peak hours can also tap into additional resources, computing, storage, and distribution offered by Alibaba Cloud. And once again, the scale of this partnership is massive, considering that they are the largest Asian cloud service provider in the Asia-Pacific region. So Avalanche really being recognized by some major names here in the industry, and that is what you want to see when it comes to that long-term adoption of these layer 1 solutions especially. I mean, I've talked about this multiple times on the channel that at the end of the day, I do believe Ethereum will remain the king of DeFi for the foreseeable future. I don't think that any of these layer 1 blockchains are going to overthrow Ethereum. What I'm rather looking for is a layer 1 blockchain that has a unique value proposition when compared to Ethereum, something that can kind of share the DeFi ecosystem space with Ether, and I think that Avalanche does fit that niche very well through its subnet feature, something that not Ethereum nor any other blockchain can actually say for itself. And Avalanche does also rank here. Where does it rank right now? It ranks 16th in terms of like the market cap, coming in with a $6.3 billion market cap behind other projects like Tron, Litecoin, Shiba Inu, Solana, Dogecoin, Cardano. I think that Avalanche has no business being below any of these projects, and therefore, even as it does sit at market cap number 16, I do think that Avalanche is undervalued compared to where it could be in a 3 to 5 year outlook. Now, we also saw Avalanche introduce Hyper SDK, the first framework for developers to build high performance virtual machines on Avalanche out of the box. Hyper SDK is designed to accelerate custom virtual machine development, creating the foundation to build the fastest blockchains. So simply put, one example here is that a game developer can launch an on-chain video game with the flexibility of fine-tuning the design for better gameplay, and Hyper SDK will work behind the scenes to execute the transactions quickly and efficiently. This means that it is much easier to create and deploy anything from NFT marketplaces to DeFi protocols to Web3 games on the Avalanche blockchain, as builders can focus on the customization that truly matters. So once again here, Avalanche really focusing on the ease of use of these blockchains and partnering up with big names. I think that this is going to be the key to success and the key to that bigger institutional adoption for Avalanche. And on the note of adoption, it is worth noting that Avalanche enabled a Bitcoin via the Avalanche bridge in June of 2022, and since then the growth on Avalanche has been incredible. So first of all, what is Bitcoin B as opposed to the commonly seen wrapped Bitcoin, which is issued on ETH by BitGo? Bitcoin B is a native Bitcoin bridged directly to Avalanche from the Bitcoin blockchain, and the purpose is to allow Bitcoin holders to enjoy DeFi while also being able to hold Bitcoin. Since its launch, volume has gone parabolic. You can see here that growing from 21 Bitcoin, Bitcoin.B, which is just Bitcoin.bridged, to now almost 7,000 in less than a year. And what is more impressive is the growth has actually accelerated throughout this market downturn. Now, interestingly enough, you can also see an inverse correlation here between wrapped Bitcoin and Bitcoin B, and a flippening has occurred between these two assets. So you can see here at one point there was over 15,000 wrapped Bitcoin circulating, and that has been moving to the downside as we have seen this flippening between wrapped Bitcoin and bridged Bitcoin on the Avalanche blockchain. Now, to date, the trend has continued with the two assets and their respective market caps, with the bridged Bitcoin sitting at 171 million, with wrapped Bitcoin at 68 million. So AVAX here is definitely the preferred blockchain to actually wrap your Bitcoin on, and this can also be seen with the most prominent DeFi applications on Avalanche. So in terms of what the Bitcoin is being used on in terms of the TVL by DApp, Aave makes up 20% of the bridge Bitcoin TVL on AVAX, GMX makes up 21%, Trader Joe 8%, Platypus DeFi holds 11% of the bridge Bitcoin, and Benkey Finance holding 13%. Adoption in this case has been spurred due to a superior product offering, as bridged Bitcoin offers seamless transfers between Bitcoin and Avalanche AVAX, cost-effective yield on Bitcoin reserves, and protection from price volatility often seen on wrapped Bitcoin. Less than a year since AVAX enabled Bitcoin DeFi, it has seen about 6,600 bridge Bitcoin, 171 mil in TVL, 2,300 unique wallet addresses. Imagine what these numbers may look like within a year, and we can in fact verify this on Snowtrace, that at the moment, actually let me refresh this to make sure it is fully up to date. And yeah, you can see here at the moment, there is 6,624 Bitcoin being held on the AVAX network. Now, this is significant because if I actually go over to the Bitcoin blockchain here and then click on the Lightning Network, let's go to Bitcoin. And this is going to show you exactly how much Bitcoin is being held on the Lightning Network, currently sitting at 5.23 thousand. So there is more bridge Bitcoin actually sitting not only in terms of wrapped Bitcoin on the Ethereum network, but also more AVAX Bitcoin than Bitcoin sitting on the Lightning Network itself, a layer 2 solution made for Bitcoin specifically, built on top of the Bitcoin blockchain. That shows you guys that people are preferring AVAX as their choice to actually go ahead and use Bitcoin through DeFi. Now, personally, I am not a fan of bridging Bitcoin, of using it for DeFi. I don't think that Bitcoin is meant to be a yield-bearing asset, and there is definitely risk involved. So before doing anything like this, definitely do your own research, but this does mean very good things in terms of the adoption for the Avalanche blockchain, which is pretty much the only layer 1 blockchain out there that can say it currently has more Bitcoin than Bitcoin's very own layer 2 network in the form of the Lightning Network. Now, with that, we're going to hop into the Quant news now. Once again, talking about AWS, as Avalanche is partnered with AWS as well as Quant, and we see here that Quant Quant actually announced this partnership back in 2019, in which they are pleased to announce that this will enable more than 1 million active customers to benefit from their Overledger blockchain operating system who uses AWS cloud solutions to deliver flexibility, scalability, and reliability. Quant Network CEO Gilbert Verdian said, "We are pleased to be a partner to Amazon AWS, which puts us another step closer to achieving our mission. Moreover, this partnership provides us with the invaluable opportunity to engage with over 1 million AWS customers who through this partnership can now innovate and create new business models from the use of Overledger to build industry-changing multi-chain applications on an interoperable platform." And I do like how Gilbert Verdian here is not only talking about the importance of this partnership with AWS, but also the importance of the networking effect that partnering up with AWS does have, pretty much giving Quant the potential to work with a ton of AWS customers and partners. Now, one Amazon partner that I do want to talk about in specific here is in fact the European Central Bank, and it's worth noting that while they are not direct partners, it was announced here that the ECB chose Amazon and 4 other firms to prototype a digital euro app. So I don't know if you could call this a direct partnership, but the fact that the European Central Bank is working with Amazon, the fact that Quant is partnered up with Amazon, and the fact that Amazon published a 83-page paper on a retail central bank digital currency from vision to design, that does show you guys just how important this is as a whole. And the other thing I do want to note here is that if we actually go ahead and search key term interoperable, this comes up in the document interoperability actually. Let's see how much this comes up. So you can see that it's mentioned 13 times in the article, and that is exactly what the Quant Overledger does look to solve with their technology. So let's go ahead and look at the Quant Overledger here, and I'm going to bring you guys to the how. No, the what. No, the who. God, why did they give you like the 5 W's here? There we go. Products, where is it? Why, how, yeah, there we go. Products. Okay. So here is, sorry guys, some mouse difficulties. So here is the Quant Overledger. It is a blockchain agnostic API gateway enabling interoperability by connecting businesses to multiple distributed ledger networks. What this means is through Overledger Integrate, you can create blockchain applications that will run on any chain faster and cheaper. And I think this is very crucial to the future of actual institutional adoption of blockchains. I believe that the future of crypto, of blockchains, is multi-blockchain. I don't think it will be a one blockchain wins all solution. We can see here that even the European Central Bank is exploring other options like Ethereum. We can see at the same time we have AWS working with Avalanche. We have Google working with Solana. And the point being is that there are so many different enterprises using so many different blockchains that we need a way to actually connect all of these different blockchain applications. And Quant Overledger is the piece of technology that is going to do this, in my opinion. That is why Quant is the largest altcoin position in my portfolio, and I do believe that it has that 5-figure price target potential. So I do believe that through Amazon and Quant's partnership, that Amazon will potentially be tapping into Quant for the implementation of a prototype digital euro app. And this is not like out of the ordinary for Quant whatsoever. In fact, if we take a look at the Digital Pound Foundation here, this is sort of like the UK entity that is working on a UK pound, and we get for a digital pound, sorry. We can see here that right off the bat, Gilbert Verdian sits on the board of directors. And let's also go to Gilbert Verdian's LinkedIn. I know we visit this pretty often, but this LinkedIn is just so stacked. There are multiple connections here between Gilbert Verdian and a lot of big financial institutions and governments, including the Fed Reserve, the Digital Pound Foundation, as well as HSBC. This is the largest bank in Europe who Gilbert Verdian is in fact associated with. And we can see here that as of late, Gilbert Verdian has been reposting a ton of stuff on commercial stablecoin issuance, the HM Treasury and Bank of England talking about the digital pound, lots of different hints suggesting that Quant is going to play a big role in the future of digital stablecoin currencies. And yes, we know that this means centralization is coming to crypto. I have known this and have been talking about this for a while, and that's fine because we are not here to fight against centralization. We are here to make money off it because the matter of fact is we cannot do anything to stop it. Now, hypothetically speaking, would it be nice to have a decentralized form of money where the bank is not an intermediary? Yes. And if that's what you want, I think that look no further than Bitcoin. But in my opinion, Bitcoin is the only crypto that truly represents decentralization. Everything out of that, if your crypto has a CEO, a foundation, a team behind it, somebody holding tokens and distributing them, airdropping them, giving you a distribution schedule, then it is centralized. And that's kind of like just the reality when it comes to crypto. A lot of projects do like to disguise themselves as decentralized. I think that is probably the biggest myth when it comes to crypto right now. So yeah, that's the thing when it comes down to it, is that I think centralization of crypto is inevitable, and that's fine because that means that big money should be adopting crypto as it becomes more centralized, and we simply want to be in these projects before that happens to benefit from the price appreciation of the big capital flowing in. So now that we've kind of got that out of the way, I do want to talk about the last portion of this video, and that is the Cronos chain. So at the moment, the Cronos chain is at threat of falling out of the top 10 blockchains here in terms of TVL. We can see here that it currently sits with $398 million locked on the platform, while Mixin comes in 11th place here with 376 mil. So Cronos is only ahead of the 11th place spot here by about $20 million in TVL, and that can honestly change in a day, right? So the matter of fact is Cronos is pretty at risk of falling out of the top 10. Now, another thing I do want to discuss here is the Cronos chain daily transactions chart. And as we can see here, Cronos has pretty much been range bound in between, like, let's say 50 to 60,000 transactions per day. We did see a pretty big shoot up here to 82.5k transactions, but since then it moved right back to the downside. And one other thing I do want to actually look at here is the unique addresses chart for the Cronos chain. Now, taking a look at Cronos, we can see that we are over 1 million unique wallet addresses, but increasing here like under 1,000 wallet addresses per day at the rate that we're going right now. So yeah, I mean, Cronos chain is still growing in terms of unique addresses, but the transactions have pretty much flatlined. The TVL is also flatlined here. If we actually take a look at the TVL on the Cronos chain, this has got to be one of the most stable charts I have seen in terms of that TVL. Since like November or December, we've been range bound, but really just slowly bleeding from 460 mil now down to just under 400 mil. Now, I want to kind of compare this here, the daily transactions on this chart, to let's say the daily transactions of another blockchain. We talked a lot about Avalanche in this video, so we're going to use that as an example. I think it does also serve as a good example because if I actually go to chains, we can see that at the moment, Avalanche is actually ranked 5th in terms of TVL amongst all different blockchains. And if we do want Cronos to kind of make its way into the top 5, excuse me, I think that this would be a good comparison to make. So Avalanche currently sitting in 5th place in terms of TVL, having $1.8 billion locked up on the network. That means that Cronos chain would have to go about over a 4x here in terms of that TVL. Let's assume it's at 400 mil. It would have to go up a 5x here to actually 2 billion in TVL to actually beat AVAX in terms of the USD value locked on the blockchain. And then the daily transactions, we are looking at about 67,000 transactions as of February 21st. Now let's take a look at Avalanche daily transactions here, coming in at 1.8 million daily transactions as of February 20th. So I mean, the matter of fact is that Avalanche is smoking Cronos chain in terms of TVL, also in terms of the daily transactions, and this means that the Cronos chain does have a long way to go to catch up and potentially work its way into the top 5. Now, does this mean I am bearish on CRO? Not whatsoever. The good thing here about the Cronos chain, or rather CRO, is that CRO is a multi-utility token, meaning it does not only rely on Cronos for its use cases. Okay, right off the bat, the initial reason we invested in CRO here is actually because of crypto.com themselves. Okay, we did not, when we were invested in CRO, the Cronos chain was not even a thing. We were covering Cronos on the channel as the blockchain was actually being announced and launched. So the first thing here, the reason we do hold CRO is because of crypto.com. This is a fast growing crypto platform that does offer a metal visa program, which does incentivize people to lock up their CRO in return for some juicy cashback and staking rewards. They also have the crypto pay platform that does offer you some nice cashback if you are staking over a certain amount of CRO on your app. So that is the first reason we are bullish on CRO. The second reason does come from the crypto.org mainnet explorer here. And once again, I mean, we've actually seen pretty stable growth from the crypto.org chain. If we actually take a look here at the growth, we've seen that the CRO TVL has grown up to 5.42 billion. This is up about 100 million from roughly 5.3 billion about a month ago as of January 24th of this year. So these are the reasons we originally invested in CRO that have not changed at all. Crypto.com continues to grow. The crypto.org chain continues to grow despite the stunted growth of the Cronos chain. And we we did actually see Cronos hold an AMA on Twitter last night where they spoke about the future of the Cronos chain. So hopefully they can implement a lot of these different growth avenues they are looking for to really accelerate the growth and adoption of Cronos over the long run. But despite Cronos kind of flatlining at the moment, I do still think that the link between Crypto.com and the Cronos chain could help lead a ton of TVL and new users over to CeFi, from CeFi, so the centralized exchange, to DeFi in the form of the Cronos chain and the Crypto.org chain. So yes, Cronos has flatlined in terms of TVL, but this can turn around at any minute. To be honest, it can go either way. It can go to the downside or the upside, but there are many reasons to be bullish on CROcoin despite just the Cronos chain. And as always, I do plan to keep you guys updated on the growth of these different chains that do implement CROcoin, as it is one of our favorite altcoins here on the channel. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Thursday, and I hope to catch you in the next one. Peace out for now.